Good morning, traders. Today is Thursday, April 21st. My name is Charles, and this is the Pirate Traders live stream. Welcome, welcome, welcome. Happy to have you all. Please push that like first thing in the morning to get that algo, sending some new people my way. I've decided that today, if we can get above 75 likes before the end of the first hour, I'll stay for the rest of the day. So you can get a full day with the pirate if you just give me the thumbs up. All right, well, what are we looking at here in the market? Well, yesterday we officially broke out of balance on the ES. We're still inside of it on the NQ, and I'll talk about that in a second. But we did have a breakout on the ES. Now, when the market breaks out of balance, so this is the balance area in here, when the market breaks out of balance, it often leads to excess in whatever direction it breaks out. So that increases the odds that we'll have some momentum to the upside today, which is bullish, okay? We have a lot of weak references above us in need of repair. So that is another reason for the market to push higher to try to repair some of that weakness that we left behind. But the first order of business is the gap. The market opening above yesterday's high increases the odds that it will need a counter auction to the downside, at the very least, to test yesterday's high. So if the market gets that counter auction at the open this morning and it can't get to yesterday's high, that is what we call a gap and go, which is the most bullish scenario. So say we trade a little lower, find support, and then immediately start to head higher. That is a gap and go. That is the most bullish scenario. Also, if we trade down to yesterday's high and then find support in there, that is also considered a gap and go. So we only really start to get bearish if we continue to pull down into yesterday's range, okay? As far as that is concerned, I think as long as we stay above yesterday's low, we did leave the weak M period low up here, which is right about at that balance area high. So we may need to pull down and repair that. But as long as we stay above yesterday's low, I am bullish for continuation to the upside. We do have some resistance that we're kind of sitting in right now on the daily. We have this downtrend, right? So I could see a scenario where the market sells off today and that turns into a big wick. But if we can stay above the downtrend on the daily, that is bullish as well, okay? So there's a lot of potential bullishness in the market this morning. The market is open. And what will give us a good signal is the gap, right? Do they fill the gap? Do we find support at yesterday's high? Or do they just straight up start trading higher? Any of those scenarios would be bullish for continuation and could lead to a trend day as a breakout of balance. Okay, so that's what I'm watching. Looking for the gap fill. Can they get it? Overnight inventory very net long. As always, one potential gap trade if the initial impulse is to the upside, like it was this morning. What you can do is once you get resistance and the market starts to pull back down, you can short at the market open and just put your stop above whatever the high was at that time. And if you're going to get a gap filled, that will usually be a safe amount of risk to take, targeting yesterday's high. Okay, the first old week reference from the 8th is repaired. Dude, already to 52 likes. Thank you, guys. We should be able to get to 75 then before the end of the first hour. Okay, there is the second week reference repaired. We would expect the market to start to get some resistance here, as this is more short covering than new money buying. So let's take a look at the NQ. The NQ was still inside its balance area. So you could draw its balance area like that right there. It was still inside. So today, if it breaks out of balance, that will be bullish. But if it fails once again, if it pokes above and pulls back in, that will be bearish. Okay, we got FOMO traders getting themselves long here at an exact location. Still think the market needs to pull back and try to fill the gap. It's also worth noting value has been higher the last few days. So 2 days ago, value was completely higher. Yesterday, value was overlapping to higher. That is an indication of a new trend beginning. One more reason to be bullish. Man, they're doing a beautiful job absorbing this overnight activity. You can see the ticks are pulling back down to the 0 line, but the price is staying up here. That's bullish. We could be looking at ourselves a gap and go here today. Don't like the taper on the low. Don't like the fact that we literally pushed instantly higher and didn't get any kind of counter auction to the downside. But I will be looking for support in here. When we come back down to work on that taper at the low. Okay, so that gap fill trade I discussed earlier, shorting here with a high above the high of the day, not a good risk reward now. You got a lot of momentum in the market. They're doing a great job of absorbing the overnight activity. And, that's more risk than reward. So today I feel it might be better to wait for support and buy long rather than try to catch the short for the gap fill. Unless you're taking a very quick scalp. Okay, moment of truth. Do the buyers start to step in here? Obviously, if the momentum of a gap, if the excitement, if the enthusiasm, if the FOMO is going to be able to continue, we should not get more sellers than buyers, which is what we see if the ticks start to get below the zero line. We should see those buyers so desperate to get themselves long. They got to have it. I don't love the exactness of buying the overnight high like this, but this is a gap and go. So let's just take account of what we're looking at here and how we're looking at it. Right now, the ticks absorb the overnight inventory. That's good to see. It means the market doesn't have to go any lower. Okay, we're finding support at the zero line. That's a little bit bullish to see. The advancers versus decliners aren't bearish, but this candle is funky. So we'll just call that a bit strange, a bit weird. It's not bearish, but it's not quite as bullish as if the advancer versus decliner just kind of stayed up here. We've got value higher. That's a little bit bullish. We've got a gap up. That's a little bit bullish. We're finding support at the overnight high. That's a little bit wonky because of the exact reference, but it is still bullish. It's not bearish to find support. And the fact that we didn't even pull back at all from the open is another little bit wonky thing, but it's not bearish. So I would say the market-generated information is bullish, but it's a little fishy, a little bit. So we say to ourselves, okay, we assume these are short-term traders buying the overnight high because it's such a specific level. You know, it's not big money players. They're not buying an exact level like that. So that's short-term traders. So the question is there enough buyers to hold this up now? If there is, we'll get continuation to the upside. But if it breaks, they'll try to fill that gap. So moment of truth here. It's like that Braveheart movie. Hold. Hold. Can they hold it? All right, ladies and gentlemen, I'm officially bullish. I'm a buyer as long as we stay above yesterday's high. Even if we try to fill the gap, as long as we stay above yesterday's high, I think this momentum is going to give us a little bit of a trend higher here. Yes, they're weak hands buyers, but the thing about momentum, you don't want to fight momentum. It will shock you how far they can push it. Good morning, David Glass. Pal is speaking at 11 and 1 p.m. today. Sweet. We can watch that together. And we made it to 79 likes. So we're going to party all day. Scooball, hello to you. Sanju, good morning. Cyrus, hello. Joe, welcome. Good to see you. Philip, good morning. Rev, greetings. MW, good morning to you. Greg, hi. Hustler Forever, good morning. John Lash, good morning to you. Chief, good to see you. Xavier in the house. Ronald, welcome. Jack, good morning to you. Jack, how convenient. VWAP is also at 44.85. For potential support at yesterday's high. There you go. Very, very convenient. Eldora, welcome. Good to see you. XD Dean, good to see you. Bob, good morning. Nor Auto Trader, good morning. NQ, no good morning to the ES? Just good morning, NQ. All right. NQ broke yesterday's high, which was weak. But see, the NQ is not as strong as the ES. It wasn't yesterday and it's not today because they are still just flirting with that balance area high. So we can see over and over again, we have run out of buyers up here. Every time we've come up to this area. So to convince me that they're bullish, they got to get above this and come back down and find support. Until then, they could easily pull back down. For those of you that are new to the market profile and have no clue what you're looking at here, essentially the market profile just takes the same exact information you see in the regular candlesticks and just displays it in 3 dimensions so that you can see both where price went, which is what the candlesticks show you, and how much time and volume it put in at particular levels. So when we look at the NQ here, we can see there's been very little time and volume in these areas, right? The volume is the pink and red coloring. That's the larger nodes of volume. And the areas where you see more letters, that's the areas where the market spent more time. So we can see that, over the past week, every time it tries to come up into this area, it spends very little time, brings in very little volume up here. So to convince me that they're ready to go higher, they got to push up, come back down, and then do that. Give me one of these big fat nodes, lots of time, lots of volume, ready for continuation. But that is what the ES did yesterday, which is why it's more bullish. Okay, so the next week reference to the upside is left behind from the 8th as well, the week H period high. That is a target to the upside. It is also the previous balance area high. So, 2 weeks ago, that's where we ran out of buyers. So we could get some resistance there. If not, a gap and go is pretty much the most bullish thing you can get and can lead to a trend day where people just FOMO in all day long. Unless, of course, Papa Pal says something naughty. Jay Trader, good morning to you. Scott, does Murderbot come out if we hit 75? I sure hope not. Scooball, stupid no pullback day again? Man, we just had the pullback. The pullback was this support. They tested it and tested it and tested it. They got perfect support at the 0 line on the ticks as they were doing it. That was the pullback. S&P Addict, good morning to you. Good to see you. Diego is here. Welcome. Aviv in the house. Nilesh, good to see you. Nilesh, can you explain the ticks you use? Well, as far as on-market profile, I'm in 2 tick increments, which means each letter represents 2 ticks. But if you're talking about the tick charts, the one that says just tick down here on the bottom left, that represents the NYSE. And the one that says tick Q, that's the Nasdaq. And essentially, it's just measuring the buyers versus the sellers on the actual stocks within the Nasdaq and the NYSE. So it's a way to compare what's happening in the futures to what's happening with the underlying shares. Mangala, does this chat have a paid trade alert? No, we don't do trade alerts. I'll teach you how to see the market, how to understand what it's doing. But how to risk your capital, that's up to you. Everyone's personality is different, and anyone who tells you that their system will work for you is lying to you. You don't have the same experience as them. You don't process information the same as them. You don't have the same amount of capital to work with as them. So why would your system be the same as theirs? Better to create one that's right for you. But you got to start with understanding what you're seeing happening in the market. And that is what the market profile does. Okay, support at the halfback. Rocket fed on deck today twice. Yeah, I mean, it's important to note, all bets are off the moment that Papa Powell starts to speak. He could say anything, and anything could happen. Screwball, gap and go, breaking balance. This is going to end red. I'm not sure what you mean. Both of those are bullish things. Jock Lowe, good morning to you. It's a joke. Is the NQ struggling? Oh, yeah. NQ's looking weak. I would say next support for NQ is going to be around 14,164, just below the low. Still don't have the buyers to break out of balance. Bossman, NQ look above and fail. I would give it a little bit of time. I mean, we're just in the first half an hour of the day. But yeah, if it can't get back above these highs, that would be a look above and fail of both the balance area and yesterday's range, which would be bearish. But we'll give them a minute. All right, well, the ticks are showing us we're starting to get more sellers than buyers here. So they may need to try to fill that gap. But for the moment, we are still getting support at halfback. Which is bullish. If we break 98, I'm looking to fill the gap, or to try to anyway. But like I said, I still remain bullish above yesterday's high. What does that mean when I say I remain bullish, even if I think, that if this level breaks, we're going to head lower? It just means I'm not looking to take a short there. I'd rather buy the support once it does on the way back up. Trading Donkey would be interesting in ES, or would be interested in ES long at the 200 daily SMA. Yeah, we're right on top of that right now. Around 44.94. Oh, you're right. Sorry, dude. 77. Ooh, I don't know. 77. Then you're pulling back down into yesterday's range. I would have a pretty tight stop if I was going to get into a long there. Probably like just below 70. All right, well, the more time we spend bouncing around here, the weaker it becomes, right? If a gap and go is about momentum, it's about excitement. The traders, they got to get long. They're going to miss their chance. So they just desperately buy. If that doesn't start to happen soon, it'll get weaker and pull back, as they are really buying at the exactness of the overnight high. So as soon as that breaks, all those short-term traders are going to get squeezed out. So they really need to pump it pretty soon here. Daniel, man, I sold my puts early. I felt it did not expect it to come back down and fill the gap. Yeah, it was tricky. I too thought it was going to just pump. One of those just straight up rips your face off and goes. That's what it felt like. But there were those couple of fishy signals, right? They were buying exactly at the overnight high, and the advancers versus decliners had that funky candle. So there were some warnings that it wasn't 100%. All right, well, we're starting to break that support at the overnight high. Looking for a gap fill. So once again, next support for the NQ is about 14,156-ish, that general area. If that breaks, look towards 14,115-ish as the next potential support. You just created a poor low on the NQ, so that increases the odds that the market will push away first and then come back and repair it at some point. Boop, there's the repair. And they're down inside that gap now on the ES. Once again, for those of you that are just joining, finding support anywhere inside the gap or at yesterday's high is bullish for continuation to the upside. Jerry, where do you see the gap on the TPO chart? Well, this particular software that I happen to use, Window Trader, it puts this little green arrow in there. So you can see exactly where the gap starts and which direction it's pointing to gap up. But just any time you have space in between the current low and the previous day's high, that is the gap. Sorry, I just took a swig of coffee, got some mushrooms stuck in the back of my throat. Greg, I was wrong about the 200 being at 91. It's at 77. I was looking at the 20. The 20 is at 94, actually, 95. And the 200, 77.25. Dean, stop putting shrooms in your coffee. I actually tried that a long time ago. Back when I lived in LA, I tried like microdosing for like a month while I was trading. Didn't really find it had any positive effect or negative. Just not much effect at all. I did feel a little bit like more relaxed, but that's about it. Honestly, I'm impressed we didn't squeeze the buyers more than this. I would have expected a little bit of a like liquidation type of drop. But instead, we're making great taper and just very slowly bringing in buyers. That's bullish. Next order of business, getting those ticks to get above the zero line and stay above it. You can do it. You can do it, ticks. Bossman, NQ looks like it wants to go to the opposite end of balance. Yeah, it's still too early to make a call. Let's see if this area right around the open becomes resistance. If they can't get back through the open, they'll get another push lower. For those of you that don't know, on the software, the open is this little green dot. Just makes it kind of easy to see where the market opened. And, we got this big node of volume right here. So we know that's going to be either support or resistance. So if they keep poking into it and they can't get above there, it's resistance. Looking to go lower. Also, it's worth mentioning, for those of you that don't know what the market profile is, over here on the left, this volume profile shows you how much volume has traded within the whole day, whereas the one that's in the middle here, that is going to show you the volume that's traded within the current 30-minute time period. Okay, back to the ES. Nick, I use what's called Window Trader. There's actually a link in the description. But it is pretty much like the most expensive one. So I always tell people you can use any market profile software. All you need to be able to do is see how much time the market spends at a certain level. So that's like you can see all these letters. The areas where it's fatter, we can tell that the market spends more time. But you don't have to use letters. You can, sometimes people use like little circles or squares or whatever you want, just to be able to tell how much time you spent at a certain level and then how much volume. And pretty much any market profile, I mean, literally any market profile software will show you those two things. Hustle if ever. Don't like the slow grind. Going to take my 6 points and bail. I assume you mean in a short. Yeah, that's why I said I wasn't interested in trying to short the gap fill, because it would be frustrating. You could find support anywhere in here, and you just don't know. So if we get back into yesterday's range, come up, we find resistance, I'm happy to short there. But I'd rather wait and buy support if we get a gap and go. All right, ticks are starting to trend down. That's a little bit bearish to see. Do we get support at yesterday's high? Man, tale of two markets, just like yesterday. ES wants to break out. NQ is not ready. Oof, yes, sir. That is officially another look above and fail. I'd say next support 14,113-ish. If that breaks, 14,080. Jocklo, would you consider a poor high or low overnight a reference? No, I don't. Not in terms of like increasing the odds that we'll visit it during the regular trading hours. Not at all. And they actually do make poor references all the time in the overnight. It's just kind of how they trade. They don't get the same kind of excess we do in the regular trading hours. Greg, so you're only using, or no, you're saying using the overnight? Yeah, no, mine uses that too. I don't know why yours is so far off from mine. Man, this is like the slowest gap fill ever. MaxPain.exe running this morning. John, do you track the gap HB level? I don't know what that is. Do you mean the half gap? Is that what you're referring to? I don't specifically, but I do know that has a very, very high probability of getting filled. I forget what the exact statistics are, but it's like a gap gets filled 60% of the time, a half gap gets filled 90% or something like that. It's like way more likely. For those of you that are new to the stream, turn to Trading Donkey for wise words like ate a baked potato for breakfast. Thanks, man. Okay, so we're starting to create good taper on the low. That is a sign that we are running out of sellers down there. The buyers are defending. Can they get those ticks above the zero line? Can they do it? Oh yeah, the Mitch Hedberg joke about the baked potato. A baked potato. I love a baked potato, but it takes so long. Sometimes I just throw in a baked potato because by the time it's ready, who knows? Yeah, I do a pretty good Mitch Hedberg. When I was in high school, I went to military school, and we weren't allowed to like watch TV or do anything like that. So at night, I used to lay in bed and listen to comedy albums, and I was obsessed with Mitch Hedberg. I could do his entire album from beginning to end, word for word, exactly like him. To all of my friends' absolute hatred, because I would just do Mitch Hedberg jokes all the time. All right. Well, with the printing of the C period, the buyers have to take control here, because if they still try to fill that gap now, they will begin one time framing lower, which would be bearish. So at this point, I only remain bullish if we stay above the B period high. They were able to get the ticks back above the zero, so can they keep them up there? Do new buyers start to step in? Let's see what happens. Potential resistance at the halfback, 44.9850. Xavier, it would be another range day. You mean if we started one time framing lower? I wouldn't know, right? It would be one of those things where the trend would begin to the downside, and we'd have to wait for cessation of that trend to know it's going to range. But there is a chance, and I'm not calling for this, not me making a prediction. Right now, the market is bullish. But if this were to happen, if the C period were to push below the B, we began one time framing lower, we filled the gap, didn't find support there, and continued lower, we could get a big sell-off day. You know what I mean? We could keep trending lower all day as a look above and fail of the balance area. But of course, right now it'd be way too early to make that call. Okay, we got a weak C period low here in need of repair. When you see me mark a reference as weak, it just means there's a slightly higher chance the market's going to push back through it again. Get a couple more ticks lower. But 1 week reference is not that big of a deal. This morning, we had 3 week references above us, right? And we went and repaired the first two. But the last one, we were like, it's okay. We'll leave that one behind. Giacomo started a new rule. When it's close to my target, over 2-to-1 risk reward ratio, and it just sits, I give it 10 minutes, and if it's still sitting there, I exit. I love that. I think that's great. And that's what, when I talk about people developing their own system, that's great. You have figured out for you, there's like a patience thing where it's like, if it doesn't work out for me within 10 minutes, I'd rather just take my profits than have it go against me. Whereas I wouldn't be like that. I'd rather wait and just be patient because that's more my personality. If I'm confident it's going to my target, I don't care how long it takes to get there. I care what path it takes. I, of course, have stops, but time-wise, I don't care. Okay, so some potential resistance here at the halfback. Do the sellers knock the ticks back below the zero, or can the buyers hold it? Screwball, but sometimes time is a signal that it's not going good. Sure, but what's your time frame? Are you trying to get in and out of a trade very quickly? Is 10 minutes enough time? Or are you willing to sit in your trade for 5 hours if that's what it takes? In which case, 10 minutes is nothing. It's all a matter of personality and what works for you. Part of the joy of trading for me is the ego I get from being right. So if I have to wait to be proven right, I'll do it. I just want to be right. And of course, I have proof of that if I win. Giacomo, at that point, I'm focused on mental capital. Exactly. No, and I think that's great. I fully support it. If you know that waiting more than 10 minutes for it to work out starts to cause you to feel frustration, absolutely. Create a rule that protects you from having to experience that. That's how you build a system custom just for you. Greg H., that ego thing does not sound good. No, it's the worst. It's the worst. Oh boy, things are getting hairy here. Couldn't stay above the zero line. That's a bit bearish. Got resistance at the halfback. And now we're about to start one time framing lower. So I will initially go neutral and see if we get some support in this node right around 73. If that breaks, bearish. Or I guess around 70. Resistance at the mid is bearish. Well, it's not bearish. Probably wasn't the right word. It's just it was the first spot for the market to get resistance on the way up, and it instantly did. So that's just like not bullish, I would say. You don't want the sellers to win the first attempt they take at it, you know? It's actually weak, though, because it's exactly the same as the overnight high. Or one tick off. Screwball chop or sell off? It's my call for today. So just the opposite of the banner. It's just not bullish. Screwball fading the banner. Man. Not the good. So once again, as I discussed earlier, the thing about a gap and go is it's about momentum. It's about excitement. So at this point, we can say it's probably a pretty high probability we're going to fill that gap because we just don't have that momentum. The bulls tried, and they seem to be failing. All right, back to neutral here. And it's pretty much bearish. I actually know I have to go trending down. We are now one time framing lower. Kind of weird to be one time framing, but still not filled the gap yet. So there could be support at yesterday's high. Let's see what we get. So for those of you that don't know, when the banner at the bottom says trending lower, that's not an opinion that I have. It is a technical signal that we get, which is if you see this little green line right here, okay, that is the initial balance, which is basically the first hour of the day's trade. Whenever we break the initial balance, we often get continuation in that direction. So we wait to see one of the TPOs, one of the letters, get above the previous before we assume that momentum is over. So at this point, I would need to see the C period get above the B, or when we print the D period, here in about 20 minutes, getting the D above the C period high before I could be convinced to go long. Otherwise, I'm only interested in short trades or being flat. Right now, this is still a potential to find support at yesterday's high, but we got that signal. So can't pick and choose when to listen to market-generated information. If it's saying we broke the balance to the downside, we are trending. And you say, well, Charles, what if the market turns around right now and gets all the way above the B period high? Didn't you leave a lot of money on the table? All that money that you could have been long and made? Yes, but I have found over my years of trading that trusting a trend You know, trusting that as long as we continue to make lower highs on these TPOs, we will continue to. That is a better way to approach the market. So every now and then I might miss an opportunity because of it, but it will save me so much in potential losses trying to fight trends, which you just don't want to do. The trend is your friend. John, I feel like at this point, everyone is waiting for what the Fed is going to say. Actually, that's a great point. The market might kind of just grind around until they get new information. Speaking of which, that's supposed to be soon, isn't it? Yeah, 10:50 tentative. If anyone's got a link to watch or can describe, I guess you can't post links in the chat, but if you can describe where to find a link, I'd watch that with you guys. Watch Papa Pal speak. Trading Donkey, if we did go back up towards that B high, could be a sick donkey trade with that prominent node on the composite. Yeah, that's a great point. There would definitely be resistance up there. Okay, so the market is trending lower. The ticks are trending lower. All four of the internals are trending lower, and we're testing yesterday's high. So if we don't find support here, I think the next target for support is 44.74-ish. Okay, no support at yesterday's high. So looking for a little more of a pullback here. We got to give all those buyers who've been fighting to hold up the market a chance to get squeezed out. They got to give up on those longs. And then new buyers who are like, ooh, the market's on sale. It's so much cheaper down here. Then they step in. NQ obviously bearish, look above and fail, and trending lower. So the ultimate target is yesterday's low, but it might be a very slow grind to get down there as there's a lot of volume as potential support inside of yesterday's range. Cyrus Russell is negative and seeking yesterday's low. Stop being negative, Russell. Jeez. Why don't you smile every once in a while? Oh, yeah. Actually, Russell looks pretty good. It was a breakout, also a breakout of bounce, a huge bouncing area. So, yeah, I would look for support on the 50 daily there at 2027. Remember, when you generally break out of balance like this, you get excess. So this would be only just the beginning. Arthur, are we turning bearish? Yeah, we're trending lower. And right now the sellers are winning. So we have not found good, strong support just yet. But I don't see it as a look above and fail for the ES anyway. The NQ is very bearish. But for the ES, I don't see it as a look above and fail just yet. I think we could have some buyers waiting down here around the 70, 3 area. But we are certainly one time framing lower. And the buyers, there are less buyers than sellers. And if you have less buyers, the price can't go up. It's got to go down. The current TPO means the C period that we are in right now. So basically TPO is just like another word for candlestick. If you would think of the, each row of letters like it's a candle, like a 30-minute candlestick, TPO is just another word for it. And it stands for time, price, opportunity. And I don't know why. That's just what they call it. Well, I have not been able to find any links to watch Pal speak, so I assume it's not going to be publicly broadcast. But Financial Jew should pop up the headlines of whatever he's saying. So we can keep up that way. Boss man, thanks for the great commentary every day. It's really speeding up my learning curve. Thank you for saying so, brother. Appreciate it. donkey. Thanks for changing the banner to bullish. Well, you obviously didn't get into your short when I changed the banner because we got a 10-point pump or a 9-point pump from when I did. All right, so leaving these single prints behind in the C period, you can see we only have one set of letters here. So that's what we call single prints. It increases the odds that at some point the market will need to push back up and backfill those single prints, but that there will likely be sellers waiting right there at the base for continuation lower. And of course, at this point, the only thing we're looking at is the D period high. As long as the D period high stays below the C period high, we assume the market is going to continue to push lower because that is what a trend does. John, Yahoo Finance has a link for the 1 p.m. talk, but not the 10:50. Okay. Well, we'll watch him at 1 p.m. then. I'll listen to Papa Pal anytime. Xavier, I don't understand why they buy aggressively overnight and sell aggress on the regular trading hours. It's just kind of how markets work. It's easiest to think of them as two separate markets. I mean, I know it's literally just one market, and there are traders from America trading during the overnight and traders from Europe trading during. I get that, but it's just easier to think of it as like it's two separate markets. So the overnight was doing its own thing last night, and then when we opened this morning, we started doing our own thing. So let's expand out the profile from last night and see what they did. Yeah, so they opened, they immediately pushed higher. They just slowly grinded higher all night. And then when they broke that S period high, it was just a slow grind higher all night long. And it would make sense that they did that, right? We officially broke out of balance yesterday. So any trader who spends a lot of time watching a market knows that when you're stuck in a range like that, when you get out, you often get a move to the upside. So yesterday we were flirting with it. Are we going to break out? Are we going to break out? Are we going to break out? And then we closed just above it. So that meant that we were likely to get some kind of a push higher. So it would make sense that they were bullish all night long. And just no bears stepped in and slapped them down. But then what happened this morning is that big move created some excitement. And today's traders just got themselves a little bit too long, a little bit too fast. And so the market needed to pull back. And then as soon as it broke that node, that was like right around here, around 97, like that was the end. Because all those buyers gave up, and then we started to sell off. I really find thinking about the market like an auction process makes it much easier to understand. Remember that when the price of that painting goes up, as that auctioneer is like, do I have 1,000? Do I have 1,100? Do I have 1,200? Do I have 1,300? The painting doesn't change. It has, the price going up has nothing to do with the actual painting itself. And it just has to do with the people in the room getting excited and wanting to bid. They see all these other people bidding and they get FOMO and they're like, I got to do it too. And so that's what makes those bids keep going up and up in that art auction, is not the piece of art, but the process of getting people excited. And that's all the market is doing. It's just doing it in both directions. Get them overly excited, get them overly fearful. Get them overly excited, get them overly fearful. All right, so the D period breaking the C period low is a continuation of the trend lower, which is bearish. Pushing into some support. Oh, there's a link and it's over. Where was the link? Oh, well, we'll catch the 1 o'clock. He'll repeat himself. Rob, where is the 200 moving average? I assume you mean the daily. Uh, 76, 75, or 77. Mark, good morning. Welcome. S&P Addict, just realized you're still on. Yeah, all day long, I'm here. All day long. So for those of you that aren't used to hanging out all day, I'll be quiet most of the time unless there's a change in the market that jumps out at me. So like as of right now, the market is trending lower, increasing the odds we're going to go lower, but we got a lot of support in here. And we do still have some single prints that need to backfill in here. So the question I'm asking myself is, obviously I think the market is going lower. How good of a job is it doing, right? Is it able to get back up and backfill those single prints? Is there resistance if it does? If so, I'd look for continuation to the downside. Is it not able to get through this support? That's the question. Can it push through here or can it push through here? And the higher probability is the downside. S&P is going to hang for the day. Awesome. Okay, so once again, we're looking for resistance at 44.8750. Got good taper on the low. I don't love the 30 contracts, but we got good taper. So whether or not we get resistance here will give us a signal of whether or not the selling is over. My guess is it's not. Xavier, I think I'm going to need a class with you, Charles. Yeah, it's the e-course has everything that you need. It's just a matter of screen time at this point. Don't expect it to all click and make sense right away. It doesn't work like that. You have to understand how the brain operates, right? The brain is like what it does is neurons make connections with one another. And the more connections that it makes, the easier it is for the brain to transfer information back and forth. And so when you're learning something that's a complex skill like this, you can't just like watch a course one time and instantly you'll understand it deeply. You have to just put in the time, day in, day out, look at the same indicators the same way, using the same parameters, and force yourself to do it. And then slowly but surely, the more and more time you spend staring at that screen, the more and more of those neurons that will begin to, what the scientists call, wire together. The more and more of those neurons that'll start to make connections. And then the concepts, which are very basic, you'll start to have a better and better understanding of them over time, because your brain is just making more and more of those connections, and so it's easier for it to process that information. Trading Donkey, I think long above the 200-day, short below. Yeah, I don't like that they stopped exactly on it, though. We know who that is. If big money wanted to buy the 200, they'd be layering in. Bum, 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 bum. So that's probably some short-term traders, those 30 contracts. Emerson, the neurons that fire together wire together. That's the one. I am a neuroscience enthusiast. For anyone that hasn't read it, change your life. Read the book, or I had to listen to it because it was too much to just sit and read. It's very like scientific, but Thinking Fast and Slow by Daniel, I forget his last name. Kahneman. Yeah. Thinking Fast and Slow. That book will change the way you think about learning stuff. It will really help you understand how your brain works. Daniel Radcliffe. uh, So obviously not being able to backfill those single prints is a little bit bearish, right? And breaking that weak low, well, kind of weakish low because it was exact, is a little bit bearish. NQ also one time framing lower. It's got this big node right here that we got to work our way through, got to grind our way through. But if we break like 1040, yesterday's low will be in play. S&P Attic Flow is another phenomenal book that stands the test of time. I don't know if I've read Flow, but I've read a bunch of books about the flow state. Yeah, Grit's another one I've seen, but I haven't read. I don't need to read a book on grit. I was born with it. Damn it. Grew up on John Wayne movies. If I had me a gun like that, I wouldn't be scared of no booger man. I was born in the darkness. You're just visiting. All right, well, that is an acceptable place to find support there, right inside that massive node from the overnight. So do the buyers have the strength to get back up into those single prints? We'd still be looking for resistance up there at 44.8750. Unless the ticks smack them down first. Yeah, on the SMA conversation, there are also settings within them. I don't really ever mess with them. I just go with like whatever the presets were. But there's like the source, close. You can change all these different parameters. And there's what's the other one? Yeah, like the number of candles to use for the linear regression and stuff like this. Like I don't ever mess with any of these. I just mess with the actual moving averages. But it could be that like your settings are just slightly different there. And of course, every software is going to have it set up a little different. The important thing is that it's the same for you every day. And then you just learn to trade off of whatever you see. Okay, so same as before, leaving those single prints behind from the D period increases the odds that we will push up and backfill them, but then we can look for resistance right there at 44.78 and creating a poor low because the E period low is 1 TPO from the D, increases the odds that we'll get that push away, but then also that we will need to come back down and repair that poor low as a continuation of the downtrend. At this point, if the E period is able to get its way above the D period high, that would be the end of the trend. But as long as the E period high stays below the D period high, we look for the market to continue going lower. Okay, poor low repaired. Market continues to one time frame lower. Both indices are pushing into the 20 moving average on the 15-minute candles. That sometimes acts as support, or usually acts as support. So if it doesn't, that would be a little more bearish. If they break on through to the downside. Fat Thor, y'all staring at the market? Yeah, that's what we do. Gotta watch the market make its moves. Also, did you guys see the new trailer? Fat Thor lost some weight. Got himself back in shape. So at this point, with the ticks looking like this, one indicator that we could have that the momentum to the downside is over is if we can get one big green tick that sort of breaks through the downtrend that we're getting here. It would have to break above and stay above. It can't just wick right back down. But when we're trying to figure out where the market will find support, that is one signal we might be finding it, is if we can get a big green tick. But we're certainly not ready yet. Volume is starting to get thin, though, so we are running out of sellers as the market is hunting for support. Speaking of which, next major support around 44.60. And I would say it's safe to consider yesterday's low in play for the NQ. This is pretty much the last major support they've got right now. As the market continues to trend lower. Mark, gotta thank you for putting me onto the Shadow Trader. Learned very much. Yeah, he's great, man. Peter Resnicek. The Res in the house. All right, enjoy class. Have a good one. Okay, so once again, some potential support around 60 here. One thing to make note of is how thin the volume is getting. The thinner and thinner the volume gets, the less and less people there are participating in the auction down here. If they run out of people willing to do business down here, they got to bring it back up, looking for new participants. So we definitely got some potential support here. Of course, that is not support to buy in a trend down. That is a support to take profit and look for a new short. Donkey. Being sarcastic about specific names from Resident Check and then drops a specific name. Bought NVIDIA. Are you just trying to pump NVIDIA, bro? Are you trying to pump it so that you can take profits? Donkey, good risk reward long here if you have the cojones. Yeah, I wouldn't. I mean, I never long against the trend, but at the very least, I'd want to see that big green tick. I'd want to see the momentum shift. But yeah, you're right. We're about to get back into balance. I'd say we got a little lower to go. 44.50s would be back into balance. Amir, the daily looking ugly. I kind of predicted that. when I opened it this morning that we'd get a big wick because we didn't even get a chance to test any resistance in here. But yeah, that ain't purty. Train Donkey, I don't like the way you drew the daily trend line. What don't you like about it? Would you have rather seen it push up against the bodies of the candles? Like that? Yeah, I was just putting it there to see what would happen when we tested it the third time. Certainly wasn't looking to short there or anything. To each their own. It's the fun of TA. Phoenix. That's funny. I put it where it should go in charts. Yeah, it's exactly like mine. Twins. Holy moly, I just noticed we're up to 103 likes. Thank you guys so much. I really appreciate that. We haven't broke 100 in a long time. I don't think we've broken 100 in 2022. Thank you very much. All right, so we got good taper at the low. That's a little bit bullish, only a tiny, tiny little bit bullish. So the next question is, can they break the downtrend in the ticks and start to pump them higher? In which case, we're looking for the market to try to head back up and backfill those single prints left behind in the D period. Looking for resistance at 44.78. Family man, wish I shorted. Yeah, it's not a great location to do that now, unfortunately. Maybe when we print the F period, you might get a chance if it pushes up towards the high of the E. But this is not a good location for a new short. Or if we break, maybe like 44.57. Chief, big volume ledge at 44.6150. Looks like if we get to 44.5850, there would be more downside. Because of breaking that? I don't know. We're pushing right into support. But yeah, if that support breaks... Actually, sorry, let me pause. Let me walk back. Yes, that is now support becoming resistance, which is bearish for a move lower. It'll get really messy if we break this support. Design knob in the house. Man, got some panic selling happening here. Obviously, if we do start to pull back down into the previous balance area, that would be bearish. I'm not really sure why we would, without there being some sort of change in the market, some sort of bearish news or something. But if we get back down in there, it increases the odds we're heading to the opposite end. Which is, of course, what we got on the NQ this morning, right? It tried to look above. It failed. Pulled back in. Where did we go? Opposite end. Chief, at what price would be entering the previous balancing area? I mean, it's hard, man. It's like we've spent so much time grinding around here. It's hard to have like an exact, like at this exact level it breaks. It's at this point just more like a general concept. We have like balance on top of balance, and they're overlapping each other. It's tricky, man, to have an exact level. If you're looking for something, say 55. It's just, again, it's just more of the concept, right? The idea is that when we're bouncing around in a range, the market doesn't know if it wants to go higher or lower. And when it breaks out, that's it trying to do it. So if it fails, it's got to head to the opposite end. You know what I mean? So it's just, this would be the idea that they tried to break out to the upside. So if they can't, where are they going to go? Opposite end. But it's not like there's an exact level where suddenly it breaks. It also doesn't mean we have to do it today. Could take 3 days or whatever. Could also make the argument that it's just one larger balance area like that, which is what it looks like on the daily. All right, well, printing the F period, we have left a astonishing number of single prints behind on the E period. And we very, very, very rarely have triple distributions. Or, I'm sorry, actually quadruple distributions with 3 sets of single prints left behind. So that significantly increases the odds that at some point today, we're going to head back up and backfill at least the first set. But right now, actually, right now would be a great time to find support. Just need that big green tick. That big that big tick energy is what we're looking for. Ooh, actually, I stand corrected. The F period low is weak. because it's one tick from the overnight low. Weakness above and weakness below. All right, week lows repaired, or the first week references anyway. Second week reference repaired. Man, this is bearish. So what's happening right now in the market is very bearish, right? It's a signal that the market is not ready to go higher. But in terms of today's intraday auction, right? Like if you're just trading for today, they're getting themselves way overly short here. So whenever this thing does find support, it's likely to turn around pretty quick. Act accordingly. Next support, 4444. Rocket, don't underestimate Fed's ability to tank the market. Do you think this is because of something that he said? Yeah, once he starts speaking at 1 o'clock, anything can happen. And it might ironically be the NQ that pulls the ES back up now, as it was able to get, I mean, there's not an exact level here, but it was able to get to the opposite end. It got below yesterday's low. So if I was a swing trader, if I had big, deep pockets and I traded the NQ, I'd be laying in my buys down here. Rocket bots and insiders get the news way before we do, but that's how it gets priced in. Greg, interesting looking volume profile today. Yeah, I mean, it's trending lower. That's a trending. It just is very thin down here, which increases the odds at some point. Whenever the down move is over, they got to come back up, at least to 72. Bring in some volume. But at the moment, momentum is in charge. And it will shock you how far they can push it. All right, looking for some support around yesterday's low, right in this little node around 44. Are there buyers waiting? Well, how will we know, Charles? We'll see it in the ticks. We'll see the ticks get green. If not, more selling. The conspiracy theorist in me has a feeling, and this is do not take a trade because of what I'm about to say, but the conspiracy theorist in me has me feel like whatever Papa Powell is going to say is going to be bullish, and so they're just getting the market as short as they can to whipsaw them right back up. Now I have no technical explanation for that. That's just me being weird, but I could see it happen. Donkey. Rocket, 35-point jitter on the NQ. Man, hardly wait till pal. Sticking to micros from here on out, I agree. My advice to everyone out there who's a less experienced trader, be flat or be trading with very, very small size once he starts to speak. Because one wrong word and this market could go either way very, very quickly. But that's 45 minutes from now. Where do we see the speech? What to look for? Well, I'll play it here. So if you just wanted to hang out, you could watch it with us. But as far as what to look for, I don't trade off of fundamentals. So I would never take a trade based on anything that he's saying. But the way the market reacts to it could present some good opportunities. They will just be very high risk, which is why I say trade with small size. And the risk is both in the volatility, both in how quickly and how far it can move, as well as the randomness of which direction. I mean, he says the right thing. We could be up at today's high in 30 seconds. Like, it's crazy how quickly the market can move. So you want to be very cautious if you're going to trade while Big Daddy speaks. And Pavel, yeah, he's talking at 1 o'clock today. I don't think I like Big Daddy. I'm not going to use that one again. That was weird. Papa Pal's okay. It's got like a wise old man ring to it. Big Daddy, that was creepy. I apologize. Pavel, it's time to make a profit. Do you mean it's time to take profits on a short? Is that what you mean? We are getting good taper, but the trend remains intact. Coach Maz. Awesome, dude. Happy to have you. For just $10 a month, you could join the brigade and hang out every day that you have a day off. Okay, so that F period low is considered weak because it is one tick from the K period low. But we are pushing into support. So we're still looking for buyers to try to save this thing. Man, stopped at 44442 a dot? No. That's weak. John, do you monitor the VIX? Not really. I look at it sometimes when I feel like I need to step back and give myself some perspective. I'll kind of run through a bunch of charts on the daily just to kind of zoom out a little bit because I get so focused on intraday trade. But most of the time, I'm not really paying attention to the VIX. All right. This is getting weird here. Another set of single prints. Further increasing the odds that the market needs to push its way back up and backfill them. I know you guys are probably thinking, Charles, you've said this like 3 times already today. We don't believe you anymore. Just wait for it. It'll happen. The market can't go straight down forever. Eventually, it needs to push back up to give stronger hand sellers a chance to join the party. Those that won't FOMO on the way down. And those base of the single prints are their opportunities. So we created a poor low on top of the weak low at the F period low, increasing the odds that we will get a push away from the poor low. And we will be looking for resistance at 44.55. And then for the market to come back and repair the poor low. Jerry, why is it called a weak reference? Because when you create a weak reference, this is going to sound stupid, but it's not strong. It's like it needs to be retested. It's not proven that the market was ready. So for this case, like the J low that we left behind on the 19th, right? Expand that profile. So that was weak because it was one tick from the I low. And it just means there's a higher probability that at some point we're going to come back and repair it. And so that's why we call it weak. Essentially, the idea is just that anybody who's buying at an exact level, they're trying to buy that C period low, right? They watched the market trade higher. They finally got a pullback. And they couldn't wait for a good pullback to backfill these single prints. They had to get in right there. And so that's weak, right? Those buyers, they're not strong hands buyers. Now, it happens to have worked out for them because a lot of people joined the party in the overnight, so we got continuation. But leaving behind weak references just increases the odds that the buyers there are going to take profits. These are not buyers that are going to hold for months at a time. They're going to take profits that day. Short-term traders. Okay, so we're getting that push away from the poor low, looking to backfill the single prints in the F period and look for resistance at 44.54. When price turns at a key reference such as 4444, is it weak sellers that stop selling or weak buyers that stop buying? No, it's that the buyers are not going to hold, right? So the people that bought this G period low, those are short-term buyers. So if the market pushes up, which it is now, and it starts to come back down, they're not going to wait around. They're going to take profits very quickly. And that's negative pressure, right? Taking profits on a long is the same as going short. So that's what brings it back down again. It's all about who the participants are. No, it's actually kind of, Jerry, it's actually kind of the opposite of a double bottom, right? Like a double bottom is a sign of strength. Like you made it, you came back, you tested it. But in our world as intraday traders, you'd want to, if you were to make a double bottom, you'd want to get at least a couple ticks lower. You wouldn't want to come exactly to the same place. But now if it came down here in the G period and it got just a little bit lower, then it'd be perfectly fine for it to go back up. I know it sounds weird. Like that sounds like BS, but it works. Day in and day out, it works. For some reason, you just need 2 letters and then you have enough excess to go the other direction. All right. Well, the poor low is repaired. And next support. I mean, it's tricky. The next thing we would look for is a repair of this weak J period low we left behind on the 19th. But if we get down in there, we'll probably backfill those single prints. So resistance at 44.55 could get us all the way down to 23. As the market continues to trend lower. Donkey saying he's calling for a cessation in the first minute of H period. What if it's in the second minute of H period? Okay, so next reference to the downside is 44.33 in need of repair. But remember, Papa Powell starts speaking in 11 minutes, and then it's anyone's ball game. Jitten needs save here? I wouldn't count on it. Like I said, right below that weak reference is a set of single prints left behind from a couple days ago. So we may not get support till down in 23-ish. I don't know what you mean, picture in picture. I just needed to resize the window so that it didn't take up the whole screen. So I can watch the charts and the talking heads at the same time. I could go full screen, I think, with it once it starts. Oops. Damn it. Wrong button. The video has to play first. Design knob, I'm almost tempted to get long here. I mean, yeah, this is like a good entry for a long, but there's just, like I said, so much risk of him saying something and it causing the market to tank even further. So if you're going to do it with very small size. No amount of money that could hurt you. Stop below 23. Greg H., this 65-point long liquidation, once it stops, should leave us with very strong buyers holding correct. Well, this is not, that's the thing, this is not a liquidation. This is a trend lower, right? A liquidation is when the market falls down and then pops back up without new sellers piling on. This has just been new sellers piling on, new sellers piling on, new sellers piling on, that's a trend down. So this is not a liquidation. It's a trend lower. And that is inventory switching from long to short. But just intraday wise, there's so much weakness in here that we know a lot of these are day traders. And so they got to exit their positions sooner or later. They got to take profits. And then it reverses very, very quickly. But it doesn't reverse because strong buyers are stepping in like a liquidation break. It's instead reversing because we're just running out of sellers on the trend down. The trend just comes to an end. Right? Every trend, if you think about the adoption curve, every trend has an adoption curve. So there's a very small group that pile on in the beginning. All right, those are the people up in here. Then you got a larger group that pile on. That's these people in here, right? Then you got the large majority who pile on. That's this group here. And then at the very end, you've got the last people who pile on, the laggards. But as you can see from the curve, the further down it goes, the less and less people there are left to pile on. And eventually when you get to the opposite end of the curve, there's no sellers left. And guess what happens? The new curve of buyers starts. So then the new buyers step in and then a majority step in and blah, blah, blah. So right now we are in a trend down and just trying to figure out where do we run out of sellers. Which will happen right when the deal is just too good for those first buyers to resist. designed up. What's the worst that can happen? It sells off more, or it sells off, stops you out, and then instantly goes back up 2 seconds later. That would be worse. Screwball, we know it's probably going to reverse, but when and where? This information is useless. Well, no, but he was asking for context of going long, and that's what I was saying. Of course, there's no way of knowing when a trend is going to end. It will shock you how far they can push it. But just know they can't push it forever, because that you eventually run out of sellers. CCT, nope, 1 minute, not 1 hour. I don't think I've ever seen this many set of single prints before. This is crazy. All right, that H period low is now considered weak because it stopped exactly at that previous week J low. Looking for a repair and then potential support. Okay, that's a repair of that weak low we left behind. Next potential support, 44.2350. Why is it falling so fast, Charles? What's going on? Single Brits, not much support in there. They tend to backfill pretty quick. The reason this feels a little bit like manufactured to me is I have never seen this kind of relentless selling without some sort of news catalyst driving it.
And Chair Powell. Welcome. So we came here today and we thought we were going to be discussing this year the recovery from a brutal 2 years of COVID. And instead, we've got the Russian invasion in Ukraine. We have that influencing prices and inflation. We have a dramatic shift in policy, and we have some aggressive lockdowns in China. And all of that is distorting and depressing the global economic outlook. So maybe, Madam MD, if you could just kick it off and set the stage for us, because you did cut your outlook for the global economy this year, and it sounds like you're going to be cutting it more. So how much of a slowdown are we facing?
It is quite significant. Last year, we were doing quite well, 6.1% growth. We were projecting slightly less, but still high for this year, nearly 5%. And then we got Omicron, first revision downwards, and the war in Ukraine second more significant revision downwards. Would there be more? It is to be seen. It depends on how long the war is going to last, how effective policymakers are going to be to deal with inflation without slowing down growth, and is there something else to hit us? We do live in a more shock-prone world. If anything we learned in these 2 years is that we have to be more agile to build more resilience to these shocks. And one of the objectives of us meeting here in Washington is to talk with each other and identify what is the policy combination that can deal with these short-term challenges without jeopardizing longer-term sustainable growth.
Well, we do have a good mix of fiscal and monetary leaders here on the panel. So just to follow up quickly, Madam MD, as far as the outlook and the deterioration, how close are we to something like a global recession?
Well, we are still very much in positive territory. Growth projection for this year, as you said, 3.6%. Let's remember that was the average growth rate between 2011 and 2019. We have only small handful of countries that are in negative territory. Among them, Ukraine, devastated, shrinking by 40%. Russia, very significantly, in fact, impacted, 11% below what we projected in October. But most of the countries are growing, although slowly. What is the big problem, Sarah? The big problem is that the exit from the pandemic-induced crisis is now slowing down for the future. Just one number. Emerging markets and developing economies will be still 6% below their pre-pandemic trend in 2026. This is 2 years or more delay in their recovery. What is my biggest worry? With food prices, energy prices up, with prospects for recovery much worse, are we going to see the phenomenon from 2019, people on the street, unrest, creating more difficult environment for policymakers to do the right thing?
Yeah, we're going to get into some of those risks, but I do want to hear the individual outlooks, especially from Europe, President Lagarde, because of its proximity to Russia and Ukraine, the spillover effects that you're seeing, and now there are concerns about stagflation there and the effects where it depresses economic growth and drives up prices. So how much has the outlook for Europe changed?
It has changed exactly in the same direction as indicated by Kristalina. So it's been a haircut to growth projections, and it's been a rise in the inflation numbers. And certainly when we look at the risks, they're skewed to the downside for growth, so there might be more cuts to come, and to the upside for inflation. That's where we are. And it's particularly saddening, not only because of the death, not because of the destruction, not because of the devastation, which in and of itself is a cause for huge concern and sympathy and support for the people of Ukraine, and blame for those who took the initiative of that unjustifiable invasion, Russia. But it's also causing harm throughout the world, predominantly in Europe for the moment, but it will, there will be ripple effects going way beyond Europe. For the moment, as you said, geography plays a role, and Europe is literally next door. Ukraine is one of us, and taking this horrible hit. We are seeing refugees out of Ukraine into many of our European shores and countries, and we have to, by solidarity, do everything we can to support them. That's the situation that we have at the moment in Europe. It is particularly saddening as well to see that the recovery that we're embarking on is being stalled to a certain degree by what is happening out there.
What if Europe takes another step and does ban Russian oil, gas, and coal? What would happen to the European economy?
Well, let me just first of all salute the sanctions that were decided on a pretty global basis. Sanctions against the oligarchs, sanctions against the family members and the people at the origin of this unjustifiable war. de-swifting of about 80% of the banking sector of Russia, and also freeze of the assets of the National Central Bank of Russia that could be identified outside of Russia and a couple of other countries. So this bulk of, there were 5 set of sanctions decided one after the other, has clearly had a massive impact on Russia. And will continue to have an impact. And I think we will. The more it's rolled out, the more impact it will have. Obviously, the next question that everybody is agitating and considering is what happens with the oil on the one hand, the gas on the other hand. I think the issue of coal has been addressed by the Europeans together, who've decided to ban coal coming out of Russia. And I think it's a process, and I would not exclude that there be more decisions to come as it unfolds.
Chair Powell, the U.S. has been a relative bright spot in the global economy, but now policies are changing, as you know, to address inflation.
All right, let's see if the market reacts to
globally
Pablo
about
Bao.
the tightening of monetary policy. What's the U.S. outlook, and how are you feeling right now about your claim that we're not heading toward recession?
I guess I'd start by saying that we are unified with our allies around the world in opposition to the invasion of Ukraine for no reason and the human suffering that's going on there. And while these economic matters are important, there are very fundamental things at stake there that we want to keep in mind. So in terms of the U.S. economy, we are a bit more remote from the immediate effects of the war compared to Europe, for example. But we will be feeling them over time, and they will come in the form of upward pressure on inflation, further upward pressure, and a bit of downward pressure on output. But the U.S. economy is very strong, performing very well. By most forecasts, we'll have another strong growth year this year. The labor market is extraordinarily tight, extremely tight, historically so, and to the point where really there's an imbalance between supply and demand for workers. And of course, the big issue that we're very focused on is inflation and getting inflation back down to our 2% goal.
But if we start to slow materially in our economy, will you stop tightening even if inflation is still above your target?
Well, so first of all, you asked about a soft landing. Basically that's our goal. Our goal is to get demand, use our tools to get demand and supply back in sync, so that inflation moves down, and do so without a slowdown that amounts to a recession. That's our goal. And I don't think you'll hear anyone at the Fed say that that's going to be straightforward or easy. It's going to be very challenging. We're going to do our very best to accomplish that. And it's absolutely essential to restore price stability. Without price stability, really the economies don't work without price stability. We need that to have a strong labor market for an extended period of time. We need it for financial stability, so we must do that.
The market has 3 50 basis point hikes coming at the next 3 meetings as of this morning. Is that reasonable?
So I try not to comment on specific market pricing for things, but I will just say this. At our last meeting, and this was in the minutes from the meeting, many on the committee thought it would be appropriate for there to be 1 or more 50 basis point hikes.
Are you one of those people?
I don't disclose my own path. I try to lead the committee, but so I think markets are processing what we're saying. They're reacting appropriately generally, but I wouldn't want to bless any particular market pricing. The thing I want to say, though, is we really are committed to using our tools to get 2% inflation back. And I think if you look at, for example, if you look at the last tightening cycle, which was a 2-year string of 25 basis point hikes from 2004 to 2006, inflation was a little over 3%. So inflation is much higher now, and our policy rate is still more accommodative than it was then. So it is appropriate, in my view, to be moving a little more quickly. And I also think there's something in the idea of front-end loading whatever accommodation one thinks is appropriate. So that does point, that points in the direction of 50 basis points being on the table. Certainly, we make these decisions at the meeting, and we'll make them meeting by meeting. But I would say that 50 basis points will be on the table for the May meeting.
Minister Miliani, are you more worried about what Fed Chair Powell is doing, or about what we're seeing in China right now with these aggressive lockdowns because of COVID as it relates to your economy and the region and emerging markets?
Well, United States and China, the 2 biggest economies in the world, whatever happened in these two economies definitely have a spillover to the rest of the world. First, I think what Chairman Powell mentioned about the challenge to stabilize the price inflation down definitely will require monetary tightening, and that has been communicated. We are talking about well-calibrated, well-communicated, well-planned. So even though we cannot avoid that direction of policy, at least market as well as many policymakers in the emerging country and developing country.
Okay, so with breaking those single prints, that was some support in there. I cannot believe it's happening like this, but that increases the odds we're heading down towards the opposite end of balance. So I don't really know where we find support, but we do need to find some support somewhere and come back up and look for resistance. So next potential support is 44.10-ish.
I'm saying that we are having the benefit of this situation, but it's our export grew by more than 24% last year, and in this first 3 months it's actually growing even higher than that. So we are enjoying surplus on trade account as well as on my budget. So we are in a position of strong position in which then this kind of situation hopefully we are going to be much less affected. Although capital outflow is happening already on a bondholder in Indonesia, and in this case, we've already reduced the exposure of the foreign ownership on our bonds to less than 18%. This is significantly reduced than originally 40%. So create stability. China situation with the COVID and the policy of lockdown definitely create.
All right, well, the ticks are finally getting above the zero line. Look at that. That was not easy. So to the upside, the target for resistance is 4444. The base of those single prints down. If they're able to get through there, we could get cessation of the trend if they can get above the G period high. And that would lead to probably a big push back up. But the first order of business will be getting back through 44.44. No news is good news.
Actually having a bigger impact, but these two very important countries will definitely have a huge impact for many developing and emerging countries. And this is on top of still very difficult recovery for many countries in the world from this pandemic. Although Indonesia output is already surpassing the pre-pandemic level, so we've already 106% above the pre-COVID level. But Indonesia is a few cases. Many is actually struggle, as Kristalina mentioned, they are still under the pre-pandemic level.
Do you have a sense of how much the China lockdowns, especially Shanghai and Shenzhen that we saw, are holding back supply chain even more at this point?
Well, that's definitely, I mean, they are among the biggest port, and for Indonesia, as well as in Asia, I think China demand for many commodities is very, very important. So either this is going to be disrupt the supply chains within China, that is have the repercussion for the rest of the world, or in this case have a direct impact in terms of the demand for commodity and other raw material. So that is really a concern.
Prime Minister Motley, haven't forgotten about you. Definitely want to hear from you. I think you win the award for the best growth forecast from the IMF this year, right? 11.2% growth. Tell us what you're experiencing. Obviously, there's a big tourism boom, but you've heard about all these headwinds, and I'm curious how you're affected by it and what you're most focused on.
Yeah, I think that the figures you quoted are what we are hoping for growth for this coming year. But like everywhere else, we are going to have to probably moderate because of the very, very certain challenges in the world. And of course, we're not only talking about the war in Ukraine, but we're also talking, as you just referred to the difficulties as a result of the lockdown in China. For us, it is probably the inflation is more of a supply chain problem because excessive demand hasn't really come back as we would like. Our economy fell by about 14% in 2020, as did all other tourism and travel dependent economies in the world in the first year of the pandemic. What we are seeing is literally an increase in inflation. By the end of last year, inflation was regrettably up to almost 6% from just over 2-3% before. So when that is now compounded by the war in Ukraine and the supply chain problems again with the lockdown in China, we expect to see continued inflationary pressures. And then when you add to that the tightening of monetary policy, that's going to be worse for us because you have to recall that unlike other countries, the only thing we could really do was literally to increase debt. We don't have the benefit of the fiscal and monetary relaxation that Europe and the UK and the US were able to do so successfully in the middle of the pandemic. We don't have those options. And that is why, for us, the whole injustice of the moment probably relates to the fact that the enormous COVID debt that we've accumulated has now also to limit the space that we have to be able to fight inflation, because in small economies such as ourselves, small open economies, as you know, the only way we can cushion inflation is by expanding our fiscal position to be able to buffer people. So these things are truly concerning to us. The issue of the debt is even more so. And let us compare, as I have done for the last 2 years, the GSSI and the Common Debt Framework as against what had been done by the G7 countries. And let us also reflect on the fact that we're not going to be serious unless we bring the non-Paris Club actors to the table. The private sector has to come. And we're not going to be serious until we address the issue of the climate crisis and the funding that's necessary, because at the same time that we're facing all of this, we have less than 12 years to adapt to a very, very light probability of a 1.5-degree world. But even if it doesn't get there at 1.2, as you all know, we're already seeing the devastating impacts of the storms and the hurricanes. But what most people don't know about are the droughts and the sargassum seaweed and the destruction of the coral reefs that lead to coastal erosion. So at a time when we need to have expenditure more than ever, there is little concessionary funding available, there's little fiscal space available, and there's an urgent need for us to seriously reform the international financial institutions if we are to be equal to the majority of poor people who don't live, by the way, in poor countries. 75% of the poor people of the world live in middle-income countries that are denied access to concessionary funding and that do not have the fiscal space even when they get funding, and that have been compounded by events outside of control in the pandemic and indeed, of course, with the climate crisis.
That sounds like a to-do list for the IMF.
So much so. Mia, I have a piece of really good news for you. You have been championing the allocation of concessional finance, not only on income per capita, but also on vulnerability to climate shocks. And today, at the discussions we had, the Resilience and Sustainability Trust, which will provide long-term maturity, finally financing to vulnerable middle countries, got a big boost. We signed up already $40 billion for it. So one instrument that you should take pride of. When Christine was the managing director of the IMF, I remember you saying to us, there has to be allocation of concessional finance linked to vulnerability. It has happened. But let me take two more points of Mia's list, if I may. The first one is the issue of debt. In 2020, debt levels have jumped for an understandable reason, to put a floor under the economy. Largest increase since the Second World War in 1 year. In 21, it was easy because interest rates were low, access to financing abundant. For some, it was cheaper to pay for more debt in 21 because of this drop in interest rates. 22, different. In 22, we have to brace for quite a number of low-income countries, some middle-income countries, to hit the wall. And we have to be honest. That requires upfront action by the countries themselves. Do all you can, extend maturities. If you have currency mismatches, fix it. But also for us, and the IMF has its own responsibility.
All right. So we're about to head up and test the base of those single prints at 44.4350. We'll see if we get some resistance there. I do like the look of that tick, though. That looks like a tick that would be a sign that the downtrend is over. So if we're able to get through the base of the single prints down here, the next thing we look for is, can the H period high get above the G period high? If so, I mean, it's an insane range, but if so, then we assume the downtrend is officially over and we look for the market to go sideways. But in this case, with this many single prints left behind, I would say we need to, at the very least, head up to like 72 and maybe even up to like 80 once we get cessation. But we got to get the cessation of the trend first. And ooh, we might get it now in the I period. Pulling the POC down here is extremely bearish, but it'll probably move back up once price works its way back up. This is a donkey trade, a very low risk short. If you think the trend is going to continue, don't know why you would. Ooh, back to central bank talk.
This guy or President Lagarde?
Whoa. Well, they both are fully equipped to do their jobs, and as a result, it is easy for both of them.
Yeah, I think we can agree with that.
But President Lagarde, so clear, Europe is dealing with sky-high inflation rates as well, highest we've seen in the Eurozone. Why are you not sounding as hawkish as
All right,
Chair
that is
Powell
the cessation of the
when it comes to
downtrend,
raising interest rates and tackling inflation?
which means
Well, first
the
of all,
market
I'm
is
not
rotational
a hawk,
in
I'm not
air
a dove,
quotes.
and I'm carrying this little owl.
But essentially,
all
at
the
this
time
point,
to remind myself
tough to
that
make a call where it's going to find
everything that we
resistance and start
eventually
bouncing
decide
around.
has to be a concerted,
Lots of single prints
coordinated,
above
collective
that need to be
decision.
backfilled.
But I think you ask a really important question, and I thank you for that, because it's often the case that commentators, analysts will just
Potential
put the
resistance
two of
at
us in the same
55,
bag,
then
and I'm very proud to be
65,
associated
and then
with
72.
Jay Powell, because I respect him greatly. But our economies are moving at a different pace. Our inflation are fed by different components. And as a result of that, our analysis of the roots and the consequences of inflation have to be different. Let me just give you an example, and I'll just speak for Europe, and then I'll let my colleague, Mr. Powell, speak for his economy. Given that we have both the objective of price stability, which is the driving compass for us. Our inflation numbers are very high. You're right. 7.4% in March, and we will be, more than double above the target at the end of the year. But when you try to understand what comprises that very high number, you see that almost 50% of it is energy prices. So that's a supply shock that we are taking. If I look at my core inflation, so if you take out food, you take out energy, I'm down to 3%. It is north of my target, which is 2%, but it is more manageable, if I may. It's actually 2.9% because it's just been revised this morning. So our inflation is fueled by a supply shock. which calls for a particular type of response, which brings together fiscal policies and monetary policy. And obviously, we cannot operate at the same pace, with the same sequence, using the same instrument necessarily when it's that kind of inflation that we are dealing with. So it is much broader base than it was. It is much higher than our target, but it is supply driven, number one, and it needs to be addressed in a sequential, flexible, gradual way, which is what we have begun doing. We have started the journey back in December. We have reinforced that position in March, and we will have a new set of fresh data in June, which is when we have our next Monetary Policy Governing Council, at which point we will have to determine when we stop net asset purchases in the course of the third quarter, of course, but when in the third quarter is it going to?
Laser Eye found new sellers? No, it's just the laggards. There's always somebody who tries to jump on the trend at the very end. The market is rotational. I'd say the H period low is the low.
July.
I have all the steps, all the tools, and all the sequences in my mind all the time. And what I look at all the time too is the various indicators that are provided by the forecasters, by market analysts, by markets, by consumers, by the labor market, which informs us, because clearly the second round inflation is one component that for us is critically important in order to determine whether inflation expectations are well re-anchored at around 2% or whether they are at risk of de-anchoring. So that's what I have on my mind all the time. But
they're moving up a little bit, aren't they?
To be fixated on a day, a time in the day, doesn't make any sense to me, because once we say that we are data dependent, for goodness sake, let's wait until we have the data and then we move on to decide. And we've agreed on a sequence. We have to follow that sequence in the journey that we have embarked upon.
What about inflation in the US? Some are wondering if it's peaked. Do you think so?
So let me say one of the great benefits of the IMF meetings is the chance to talk and collaborate. Christine and me and all of our colleagues talk about these things, and we find a couple of things. First is that inflation is really a global problem. It's quite everywhere, and it's high in most places. But there are differences. There are certainly differences. So in the United States, we have very strong growth, and we have higher inflation. We have higher core inflation than Europe does, for example. We also came into this. Europe has struggled more than we have with low inflation, well below target, had a much lower policy rate. So we have a different level of underlying inflation. So they're just differences. And of course, we all serve domestic mandates. So in the case of the United States, we have had an expectation that inflation would peak around this time and would come down over the course of the rest of the year to an extent, and then come down further in 2023. These expectations have been disappointed in the past, and so now we're really in wanting to see actual progress. It may be that the actual peak was in March, but we don't know that, and so we're not going to count on it. And we're also no longer going to count on help from supply side healing. We're gonna if we get that, that'll be great, and I think that would be enormously helpful in having a soft landing. But we're really going to be raising rates and getting expeditiously to levels that are more neutral, and then that are actually tightening policy, if that turns out to be appropriate once we get there.
But isn't it going to be hard to control inflation through tightening when a lot of it is coming
okay, potential support
from
in
the fact
this
that
little
Russia and
node of
Ukraine are
volume
major
around
exporters of
29.50.
so many commodities that we need. We don't
A
know how long
rotation
this
back
war
up to the
is going to
POC
go on.
at
We don't know how
4.4,
long China is going to be seeing these rolling
4.75.
shutdowns and therefore more supply crunch. Isn't it going to be harder than normal to get a handle on inflation through your policies?
Yeah, we of course can't affect supply side issues. We really can't affect much food and energy prices either in the near term. So it comes down to what we can do is our tools work on demand. But we have a job to do on demand, and I'll go point to the labor market. There are substantially more job openings than there are people who are unemployed. And if you take total employed people plus job openings, that's demand for labor. If you look at the size of the labor force, there are more than 5 million more demand than there is supply. So we've got a demand-supply imbalance in the labor market, and elsewhere in the economy. It's clear, and that comes from a number of things, including fiscal policy, including what we did at the height of the crisis. So there is a demand job to do, but you're right, we can't fix supply side problems.
Do you need the stock market to be lower to
Well,
impact demand?
You know, I never would point to one particular price or asset or class of assets, but generally the way our policy works is we control one overnight rate, plus the balance sheet also has some effects. And that affects broader financial conditions, and that includes asset prices, include credit availability, risk spreads, all kinds of financial conditions. And the financial conditions, in the end, those are what affect the real economy. So we monitor financial conditions. So there really are two steps there. And you know, one of the many, there are many different combinations that are possible of financial conditions, and we have seen some tightening from our, from our rate increases, and that's to be expected.
So some people have this idea, President Lagarde, that you guys need to shock the markets to really to start to see more of an impact when it comes to putting pressure on demand and on inflation. Is that something you ascribe to?
I think what we need to do is communicate with as much clarity as possible as to what we analyze, what we see, what timing we have in mind, and what journey we're embarking on. And you know, for us, it's not so much an issue of tightening when we look at the real rate. It's an issue of normalizing monetary policy and using the tools that we have. I think the added dimension that Europe has is that it's a monetary union with the complexity of a monetary union where you have 19 different fiscal policies, 19 different treasuries, and that makes my job just a little bit more complicated.
But you also have the euro, which, because you're moving at a slower pace, is weakening pretty substantially. Is it getting too weak and making the inflation problem worse?
No, we don't target any particular exchange rate. We pay attention to it. It clearly has an impact on inflation. But we don't target any exchange rate.
Minister Miliani, want to move it to the fiscal side of things. We've done monetary policy. As you look at the appropriate policies right now, you know, it's a little tricky because normally the IMF would advocate for fiscal stimulus in a weakening global economy. Can't do that now when we have such a strong inflationary environment. So how are you thinking of the sort of policies to insulate your economy from some of these issues?
Well, first, we are not starting from the situation which is favorable after 2 years of the pandemic, which is widening the deficit and debt for all countries in the world. That's one thing. Second, with the interest rate inflation and the interest rate response, the cost of borrowing definitely is going to be high. So if you are going to continue boosting, this is the supply-demand side in this case. If you look at the recovery in Indonesia case, demand has been now growing very fast. Consumption recover with the mobility because of the pandemic under control, investment recover, export is double-digit growth. So we don't have the recovery from the demand side. If it is going to be a problem, whether this can create overheating, but our inflation is now around 2%, so it's much low in this case. The problem on the supply side is much more complicated, as Chairman Powell mentioned. If it is related to the energy and food, it politically, socially very sensitive. You cannot delay on that side. And that's why usually that immediately create a fiscal pressure in the form of, are you going to allow this shock coming from outside pass through directly to the people, or you are going to absorb this shock through your fiscal policy by providing subsidy, and then your deficit will be widened. That deficit is going to be too costly because the interest rate now is much higher. So this is really not a free lunch or free policy. You really have to be very careful in designing all aspects of the fiscal side. I think from the Minister of Finance point of view, you should not, just like Christine mentioned, you should not narrow your instrument. You have a lot of options. In the fiscal side, you have on revenue side, so on tax, non-tax revenue, excise, you really have to look at the composition of your revenue, which one is actually strong enough to then you can collect more. And that's why in Indonesia, even during pandemic, we reformed the taxation. We passed through legislation, we harmonizing the whole legislation related to the tax, including anticipating to this global taxation agreement in which we are going to have at least a better arrangement on the taxation across country. The second one, you look at the spending side, and this is exactly our spending in the past 2 years dominated mainly by the COVID-related spending, health, vaccine, treatment, therapeutic. So now when the declining rate of the COVID, meaning that you have a fiscal space, you don't want to squeeze so that the economy is going to weak again. So the same space, but you free up from this health, you can use it for others. For example, infrastructure again, labor-intensive infrastructure so that you can create jobs, because many of them is actually unemployed or reduce their income during the pandemic. That can be done. So expenditure side definitely have a room for that, for you to really do in a much more detailed way what that can create job better, what that can shield this shock. For example, like food security, energy security, infrastructure that can improve your productivity. So that is very important. Then you are dealing with the financing strategy. With this higher borrowing costs, you have to be very careful. So fiscal consolidation is definitely very important. In Indonesia, we're reducing our deficit from 6.1% to 4.5%. We are aiming for 4% and then below 3%. That is the fiscal discipline of the Indonesia fiscal policy in the past 20 years. So we only have 3 years during this pandemic to allow to have the fiscal deficit above 3%. That's signaling to the market that we are on our track, credible enough, so that the market is going to price our bond correctly in this case. So they are not creating excessive punishment only because Chairman Powell said that I'm going to do the 50 basis point how many times. That is going to be something that...
What did he say?
Well, no.
Prime Minister,
because you're asking the question.
Yeah, no, he basically said it. Prime Minister Motley, you brought up food insecurity and you're very powerful. I went back last night and watched it again. Inspiring speech at the UN last fall, I believe. That was before any of this got so extreme because of the war in Russia. So I'm curious how you're thinking about it now and what sort of solutions we can look at.
Well, the truth is that all of us have had to go into a situation where we've put measures in place to boost food security, food and nutritional security. In the Caribbean community, we've set a target, which was there before all of this, of reducing imports by 25% by 2025. And we have an agricultural investment conference coming up in Guyana, which is the lead country on food security for us in the Caribbean community. But I make the point because I heard my colleague Minister just now referring to what has to be done in order to protect our people against these pressures. The reality is that with a high debt framework, as most of our developing countries have, as small island developing states, not because of profligacy, not because of corruption, but largely because of having to take on our balance sheets the consequences of the actions of others, we feel that the time has now come for us to make some decisions to change it. And Kristalina, you're absolutely correct about the Resilience and Sustainability Trust, and we thank you for it. And in fact, it's a right step in the right direction. It's the only step thus far that acknowledges vulnerability, but we need the World Bank and the development banks to go further with us. And the reality, one of the things you said to us at the beginning of the pandemic was that you needed us to to spend the money, but keep the receipts. And we did, in fact, keep the receipts. So it should be easy to identify COVID-specific debt. It should even be easy to identify climate-related debt. But what we need to do, because of our highly indebted...
Skubal, when are they ending it? If you're talking about ending the downtrend, it's already over. If you're talking about ending the conversation, I have no idea.
That what we need is to be able to move it off of our balance sheet, because if it is on our balance sheet, then it precludes us from being able to achieve the SDGs, which is our normal development trajectory. And we really want you to perhaps treat it like the British war debt, if it has to come on our balance sheet. Because if it's coming on our balance sheet, how do you have a situation where the British understood after World War I, they issued bonds in 1914 and 1917 as 30-year debt at 5%, consolidated them in 1932 to 3.5% with no maturity, And it became perpetual debt that they paid off 100 years after the 1914 debt. Now we have to think outside of the box because it's becoming increasingly difficult even for us to shield our populations with the limited fiscal space that we have against the fact that the cost of debt is likely to increase because of the monetary conditions tightening, and because of the fact that we just simply are not seeing the rate of economic recovery as quickly as we need to. Now, we're confident that tourism recovery usually can come back and bounce back quicker than most, but what is happening with the increased fuel costs will affect the cost of flights, will affect also how people view where they want to go. And you have to ask yourself, and Christine, you're perhaps better in a position to say this, is there still a strong appetite for travel in Europe, given what is happening with the war in Ukraine?
Officially long? Well, we're below the POC on rotation after finding support. There is no official.
Humanitarian crisis, if not in the midst of that crisis already.
There's a lot there. A few questions? I think you can.
I think Mia is totally right, and I think that we should acknowledge that all wars are horrible, are human tragedy, are causing devastation and economic harm. All wars, and this one is no different, and it is self-inflicted by Russia in a determined and totally unjustifiable way. But all wars are to be stopped. You're completely right. And consequences of war, when you look at Afghanistan, for instance, that's another place where clearly the consequences of wars and years of wars are hurting people and hurting women more than anything else, actually.
MD, did you want to respond on the debt question?
When the IMF was created, the main objective was to help countries correct domestic policies that are undermining their opportunities to grow and create employment. Today, what Mia is saying is we live in a world in which there are exogenous shocks that are harming countries and are putting them in a position in which on their own they simply cannot handle it. And the question in front of us is, how do we recognize that it is not bad governance, it is not bad policies, it is a climate shock, a pandemic, a war that is dramatically impacting a country, and what is the role of international institutions to be a corrective force in that regard? During our meetings this time, this issue of what is the role of the IMF in a world of multiple shocks, some of which are because of the evil of man, some of which are because of Mother Nature, but they are devastating countries to a point in which they simply cannot pull themselves out. This is one issue, and Mia is right, we have to work on identifying instruments. We are looking into our debt for climate swaps, a possibility. We haven't advanced it enough. It is still in the universe of retail. In other words, I would do it for you, for your project. We want to move it to performance indicators and the world of wholesale. In other words, we do programs with a country like Barbados. The second issue, though, is that not all problems are exogenous. We still have plenty of problems that come because of poor judgment, bad governance, corruption. When Christine was the managing director here in 2018, early 2019, in these good days that we almost forgot existed, she would say, when the sun is shining, fix the roof. Mm-hmm. What we are now discovering is that many countries did not fix the roof when the sun is shining. Now it is pouring. Well, maybe now we get to fixing the roof. I would strongly argue that there are many countries where structural reforms related to transparency, improvements in governance, can significantly improve image, attractiveness for private investments and performance. Indonesia has done systematic reforms that took Indonesia now to be in the small universe of countries, emerging market countries, that have caught up with their pre-pandemic level. And I think for us, we should not shy away from the issue of good policies mean better lives of people.
You mentioned the role of the IMF. You know, there is this bigger question right now about the role of globalization in general and the onshoring of manufacturing and supply chain. And it started with COVID, or maybe even before that, and really got exacerbated by this war in Ukraine. And obviously, Chair Powell, there are going to be ramifications of this for growth and for inflation if we are, in fact, in a world where globalization is going in reverse or even dying. What do you think?
Well, that is certainly a possible outcome here. I think you've seen questions about globalization, and this series of events around Ukraine certainly has the possibility of leading to a more fragmented political situation and economic situation. You saw Secretary Yellen's speech this week about looking to, I think she called it friendshoring. So I think there's a lot of thinking going on like that. You know, the globalization that we had benefits to it, and it had cost involved in it. And you know, these are really questions more for elected governments, I would say, than they are for a central bank. But there would certainly be a different world. It might be a world of perhaps higher inflation, perhaps lower productivity, but more resilient, more robust supply chains. If we were to have, I mean, the supply chains that we had were very efficient, but quite fragile, it turned out. So. And I think it's not clear that we're seeing a reversal of globalization. It is clear, I think, that it's certainly slowed down, and it may go into reverse. I don't know.
Is that? I mean, clearly Europe's thinking about it in terms of security and things like energy and dependence on that sort of thing. Do you think we're going in reverse?
No, I think we are going to revisit the terms of trade and who we are trading with, and on what principles we are determined to continue trading. And reorganizing supply chains. And, you know, for once, I'm quite happy to actually plead for the case of Europe, because there's always Europe bashing now and again. And I think that the work that we had to do over the last 70 years and the adjustment that we had to make, moving from a small group of 6 to now 27 countries, which are all members of this, you know, single market, where goods, capital, and people move freely, has been a laboratory of a different kind of trade. And it is not easy, let's face it. There are countries sometimes that are drifting, that would like to operate slightly differently, but where the governance, the rule of law, the principles by which we abide when we join the club, keep us together and keep up on track with those key principles that we respect. So it is a bit of a laboratory, and I would hope that as we re-examine and revisit globalization, which has provided a lot of good in and of itself, we can use that experience to see how we can enforce, how we can govern, how we can make sure that everybody is included, that, you know, we don't leave some by the side of the road, but we try to be together and make sure that it is inclusive.
I know it's something you're thinking about a lot. I mean,
yes,
maybe it's a taboo topic to talk about in an IMF World Bank meeting, but this idea of the fragmentation, what's happening geopolitically and the alliances that are forming, and how that's going to drive the underlying free movement of trade and people and capital.
We are living in a multipolar world, and that has already led to some frictions and some shifts in trading partners. But I am in the boat of those who say we are so integrated, and if you make a list of the problems that no one country can resolve on its own. It's a very long list. We have to find ways to work together. So what is the question? Are we going to evolve in blocks that are closed and function independently from each other? Or we would have some preferences, preferred trading partners, but we will have highways and bridges that allow us to still solve big problems, come on the same page. What was so interesting today in our discussions was how strong the voice of we have to work together was in the room. And it was especially emerging markets and developing economies that said, hey, we have achieved so much because of this integrated global economy. It is irresponsible to make the world poorer. And actually, Sri Mulyani spoke so well that it is the quality of our world, not just the quality of our economies, that is at stake. But it is more difficult, and it makes my job even more important in finding place for all of us to agree. You probably have heard the story of
All right, so we're heading down to test the lows here. Looks like the NQ is about to break, or did break its lows. Oh boy. Okay, so as always, when the market is rotational and it heads down to one end of the balance, or one end of the range, we look for a potential breakout. What will tell us that the market is likely to get a potential breakout, meaning getting further downside continuation? We'd need to see the ticks trending down and below the zero line. They are. And then we need to see the market push below the H period low and then come back up, find some resistance, and get new sellers piling on there. I will say, man, the NQ does not look good. Next support, 13,813. That is very, very bad. They just crossed all the way through the opposite end of balance. ES also starting to break out to the downside. I'm not really sure what they said that was so bearish. It seems like everything makes perfect sense to me. Harry, how do you see FOMO buyers early this morning? Well, there was the fact that when we opened, the market just immediately went higher. And then also, I forget what it was. There was something like, oh, they were buying at like an exact level. Like right at the high, there was like a big red node where they were all trying to pile on right there. And that was like, wait a minute, no. But better to ask that question in the morning when I'm looking at it. I don't really remember now. Man, this is quite a move to the downside. So now we're looking for new sellers to pile on here at the H period low, around 44.2250. For continuation to the downside. If we don't get new sellers and we're able to pull back up into the range, the target is once again the POC above But the NQ seems to be very bearish and wanting to go lower, so I think the ES will follow. Jesus Christ. It's time for the I have no fucking clue banner. All we can really do now is monitor for continuation to the downside. You know, look at each potential support. Does it hold? If not, next one. If it doesn't hold, the balance area low, the opposite end of balance. It's truly a guessing game of whether or not or where we'll find support. Welcome, Elias. Happy to have you.
You know, we had this economy that was, you know, very low inflation, very low unemployment everywhere in the world before the pandemic. Then the pandemic comes in and really knocks everything sideways. Then we have this remarkable, particularly in the United States, response, incredibly fast recovery, faster than anyone hoped. And then we have inflation. And so that's a lot right there. And then we have a war. And now we're realizing that COVID is still really with us. So what I'm thinking about is a couple things. One is, how is this, are we going back Probably not to the old economy. What's the new one going to look like? The other thing, maybe more pertinent to your question, is in the middle of this is a labor market in the United States where people can get paid well. It's too hot. It's unsustainably hot, but notwithstanding it, it's a very, very good labor market for workers. And it's our job to get it into to a better place where supply and demand are closer together. But I'd say that's how I'd respond.
In the upside category, risk, you're saying wages are good, people can get jobs.
I think there's a lot
That's
to like about
yeah.
the U.S. labor market, but I'd be the first to say, though, that it's not sustainably hot. But I do think with our tools, we can get supply and demand better aligned.
President Lagarde, what about you? What should we be paying more attention to?
I think of two things. One is what I would call the
Elias, what are my feelings for the market short term? Like I said, the reason I have the banner on the bottom of the screen for I don't know what the market is doing, I genuinely don't know. My analysis is based on patterns, pattern recognition, being able to see that the market is doing something that it does all the time, and I recognize it, and I go, okay, I know what the market is doing right now. I genuinely tell you, I have no clue what the market is doing right now. It's gotten so oversold, and we only got one tiny little bounce. Like, we got enough of a bounce to get 3 points of excess in the H period, and then immediately started selling off again. I think that there is something happening under the hood right now that I don't understand. So like I said, I'll just keep an eye, on the potential support. And if we can get back above the H period low, I think we could target the POC once again. But this is not a time for me to take trades or tell you to take trades. This is a time to just let the market do its thing until I have a better understanding of what it's doing. And I know you're probably thinking, but Charles, we've looked above and failed the balance area. That always means a target to the opposite end. It shouldn't happen like this. Not this harsh, not this fast. So as long as we're below the H period low, I don't really know what it's going to do. So I'm in observation mode. Yep, that's the end. A big nothing burger. Mark, I called the downside to 4444. Well, I hope you put your profits in your pocket. Perhaps now that the, news-driven event is over, maybe the market can lighten up a little bit here. potentially looking for resistance at 44.22. NQ can go a lot further down. I agree. The NQ can really take a crash here because it broke out of the lower end of balance. And if you just look at the cumulative volume, it's not looking good. So next potential support is probably like 13,740, 13,750. I mean, just to put it into perspective for you, the NQ's day today is engulfing what? Almost 6 days of trade. That's not something you would normally see. Something changed today in the market. We just don't know what it is yet. And clearly it changed to the downside. Scooball, ticks getting slapped down. Yes, sir. Market trying to recover. Can't even get to the H period low. And the ticks are getting punched right in the face at the 0 line. That is a sign that the bearish momentum is still in play. Which is enough to get me bearish. Also, once again, the buyer's buying exact levels. All it takes is puncturing through to squeeze them. Design up. Had a fantastic day. Every trade was long. I don't know why you do it. I don't know why you fight the trend. Why one time of fighting a trend and getting hurt doesn't change your mind. Okay, looking for resistance here at the K period low. I'm sorry, at the H period low. If we're able to push our way back up into the previous, what was the low, man, I can't even talk anymore. The low at the time of rotation, it increases the odds we can get to the POC, but leaving a poor low behind increases the odds that we need to repair it. So this is still no man's land, I think. Anything could happen. As this could just be the push away from the poor low. Trading Donkey, a lot of short inventory to go home flat. Absolutely. All right, we just pulled the point of control lower. That is a little bit bearish to see. I want to trust these ticks. I really, really want to trust them. But they fooled me last time. Is this finally it? Are we finally done with the downtrend? Or are they going to get slapped once again? Looks good. Okay, so I'm going to go back to rotational, but again, caution everybody. I just don't recommend taking trades in this market. Not unless you're just scalping for a few quick points here and there. Because, yeah, we're rotating again, but yeah, we left a poor low behind in need of repair. And with this kind of momentum, I could see more sellers piling on at that poor low. So trade with caution here. Or take the rest of the day off. See what the market's got tomorrow. All right, are we about to get a second breakout from a second cessation of one-time framing? Let's do it. It makes perfect sense. No, I still think the higher chance is that we just repair the poor low and then pop back up. But if we do get more selling, we know what that means. Next support, 4404. This day is bonkers, man. My brain actually hurts. Family man, there's no support, dude. Sell. Sell. Yeah, but there is like Donkey and I were just talking about, there just is the concept that at least some of them, I mean, there's definitely bigger right? There's no way we got this move without bigger players repositioning themselves. Like some major change took place in the market today. And so this is definitely not all short-term traders, right? Like this is, to get this kind of move, this was bigger players, repositioning themselves. But a lot of this still will be short-term traders. So they got to get out of their trades before the market close. So I don't think it can go straight down forever. And the next major node of support is just below us at 44.04. All right, repair of the poor low. Market getting itself oversold once again. Mark says all in shorts. You're putting some risk on the table there, brother. We are at a very low end of the range. I'd rather be taking profits on a short than entering one down here. Okay, looking for support in here. If this breaks, things will get messy. I mean, messier. Yeah, if this breaks maybe like 43.90. Rocket, I don't think levels mean anything on Fed days. That's fair. I suppose the thing that threw me off about today compared to a normal day where Powell would speak was the tempo was so much different. I suppose this kind of volatility is not that unusual, but it's like the fact that it happens so slowly. Normally it goes into like rocket ship mode. And you get both that crazy fast tempo and volatility. Rocket, I bet the Global X Open is going to be wild. Yeah, can you imagine being asleep right now, waking up the equivalent of tomorrow morning in, Asia or whatever, and then seeing this? You'd be like, oh, shit. We're down 2.3% so far today. From the high. That's a big day for the market. Not unheard of, but big. All right, well, that support is breaking. Going downtown, downtown. Well, I can say in all my time of watching the profiles, this is the first time I've ever seen 5 sets of single prints in a single day. It's not the size of the range that's weird. It's the way it moved. Very, very strange. So as we work our way down towards the opposite end of balance, we keep in mind that this is where we ran out of sellers over and over again. This whole week. $100 pip short. I haven't heard anybody use the term pips in a while. It must be a Forex trader. All right, well, finally, price is able to work its way below the value area. So we're getting some good excess in that regard to the downside. Snapchat earnings report going to save the day. Hell yeah. Snapchat can hold up the market. Adidas guy, you picked quite a day to keep the public stream going. Yeah, I don't know if it was good or bad. uh, Rejected again. Man, these buyers got nothing. They got nothing today. Next support, 43.81. Did get some solid likes. Thank you guys for that. Got 3 new subscribers to the YouTube channel as well. That's good. Rocket only buyers are for taking profits. Amir, only 6 green candles on the chart. Yeah, I mean, that's in hindsight, we can now see that's what it was. Push lower, a little profit taking. Push lower, a little profit taking. A little profit taking. The two that really threw me off, though, were the two that gave cessation. The two where we got 2 ticks above or 2 TPOs above the previous. That was what threw me off. Right here and right here. But it should have been obvious. When we failed to break out, we were heading to the opposite end. I just never would have thought in a straight line. What do you guys think? Are we going to call this a look below and fail, looking for Murderbot to go all the way back up to the highs in the last 30 seconds of the day? Or even better, 30 seconds after the market closes? That'd be fun. David C., have we filled the gap? Oh, yeah. Filled the gap like a porn star. Jitten, I think they're looking at the gap down at 1800. Oh, you mean on the ES? J Trades, that's one ugly profile. Yes, it is. Laser, I called it on the NQ, but not the ES. Well, I mean, I called it on the ES, but way late. I didn't think we were going to get it at the beginning of the day. And I just didn't think it would get this far, not in one day. 777. Yeah, that was a good call. The trend lower was correct. Again, I just couldn't have possibly imagined it would have gone this much lower. But you live and you learn. Every time this happens to me, what I do the next time we have a look above and fail is I literally say out loud to myself, like, it'll slow grind and it'll fool you the whole way, but you'll randomly end up on the opposite end by the end of the day. That's like a pattern that I say to myself, because these type of moves, this is what happens. You keep thinking it's going to find support over and over again, and then it just keeps going lower. And by the end of the day, you find yourself at the opposite end of balance. Like, how did that even happen? So just, next time I won't be fooled. I'll get short and stay short. Uh, 413's low, David Glass? No, because on 418 we passed through there. So that low was no longer in play. Once the next day kind of passes through a low, that day's low is the more important reference. So the current low here in the L period is a good low. Got good excess, got good taper. We even got excess finally from value. I don't know if you guys noticed, but the whole day today, value was right at the low of the day. And that's a sign it needs a little further lower. And we finally got that. So we got some good excess here. Let's see what the M period's got for us. First order of business to the upside, backfilling the K period single prints. Looking for resistance at 44.1150. Laser Eye, if this is other time frames entering, we could see serious move downwards in the coming days, right? Yeah, but it's, at least on the ES, it's probably a little too early to make that call. Right? Like if you just look at, we've been in balance. It's basically just a larger balancing area now. So I wouldn't panic, too much until we started to break those lows. But yeah, it's pretty bearish. Especially if you think this was a dead cat bounce. All right, the M period is upon us. Pretty average volume today. We like to do a survey where we ask people to guess, where do you think the market is going to close? At the closing bell at 4 p.m., where do you think the market's going to be? Let us know in the survey. It's completely anonymous. We won't know what you voted for or who you are or what your social security number is, but you could feel free to share that in the chat. Otherwise, it's totally anonymous. Bossman, I don't get it. To answer this poll, I would have to get ES chart. I guess I'll become an ES trader now. What are you trading? NQ, I'm a cowboy. I'm a cowboy, baby. I like volatility that moves real fast. Cowboy baby. Give me that fang all day, all night. Yeah, sorry, NQ guys. I don't mean to leave you out in the cold. Do you really want to guess? Man, the NQ does not have a lot beneath it. Let's go look at the daily. Yeah, see, like, so that what I was just talking about with the ES, how it's still kind of in a larger balance area, you are losing it on the Q. And that could lead to some selling in the days to come. Spike down at the end of the day. Selling ain't over, I'd say, no way. Gonna take your money 'cause it's games they play. All right, so if we break like 43.80, I'd say the poor low we left behind on the 18th is in play. I'd be shocked if we got down there, but at this point, I shouldn't be. Okay, so the M period low is considered weak since it's 1 TPO from the low from the 19th. Increasing the odds, we'll get at least one more little push lower. All right, last chance on the survey. We got 106 people hanging out, but only 36 willing to guess. Just guess. No one's going to know it was you. Come on, what do you think? Where's the market going to close? All right, the poll results are in. 41% think we're closing between 43.90 and 44.30, so sort of the bottom half of the range. 39% think we're closing below 43.90, which we currently are right now. 13% think in the upper end of the range, and only 6% think we can head up back towards the highs. Let's see how it plays out. In the past, the thing that gets the least votes tends to be the thing that happens, but I don't think we're going to get back above 44.60. But maybe we can get above 44.30 when the murder bot arrives. T minus 10 minutes to murder. Laser Eye, do you consider the cessations that happened as unusual or errors? It's a good question. I mean, I would definitely describe them as unusual. One cessation that starts trending again happens sometimes. Two cessations that trend again? Very rare. I don't even know if I've ever seen that. So yeah, I would definitely describe it as unusual. But you bring up a good point. Like, maybe, obviously, I wouldn't have known it ahead of time, right? Hindsight makes it easier. But yeah, if I'd have known we were going to have this kind of volatility, maybe I would have gone with like 4 tick increments. Would we have gotten cessation if I had? All right, just give my computer an hour to load this data now. Nope, still would have got cessation. So not just one of those random times. There is no technical signal that works out 100% of the time. Dancing right around that balance area low. 5 minutes to murder pod. Laura Croft in the house. We got ourselves a movie star. Welcome. Rocket, thanks, Charles. I have no idea how you do this stream all day. It's tiring. I'm definitely done when I'm done. What's that you hear, Design Knob? The sound of children crying in a distance? Rocket, I need some milk and cookies. I need a cheeseburger and a beer. That's what I need right now. Okay, so once again, potential support around 82 here in that large node of volume. If it breaks, it brings that poor low into play down there at 43.64. Mark, you identify as a lion? That's pretty cool. Walking around, just eating shit, not caring. For those of you who don't know what we're talking about, that's the Murderbot. The Murderbot is a set of algorithms that kicks in the last 10 minutes of the day and can often cause some serious volatility. Hence why we call it murder. It can rip your face off. So let's see what the Murderbot's got for us today. Laser Eye, BlackRock unloading, exactly. They've been buying your order flow all day. They've accumulated a big old position. And now they got to get their books right. It's actually a relatively tame Murderbot, considering. Scooball, how many distributions we had today? That's a great question. 1, 2, 3, 4, 5 distributions. I wouldn't over intellectualize any of this today. Let's treat it just like trading to the opposite end of balance. Aaron, the Murderbot's been on this entire day. There's definitely been some algorithms trading today. No doubt about it. All right, so there's often a second set that kicks in at 355. So we'll look for another little move here in a minute. James, plant in the Reddit thread about bloodthirsty. Are you saying you put like a fake link that came here, talking about Johnny Depp? Thanks, man. Getting rejected straight off. I'm just looking at the NQ here. It's been getting rejected on that 50 daily. Pretty hardcore. You've also completely curved down your 20 daily SMA. That is a sign of bearishness. So the ES doesn't look like it's the end of the world to me, but the NQ does not look good closing down here. The ES could go either way tomorrow. We could rotate back up or get continuation lower. But the Q looks bearish. Moving forward. So as far as what to expect for tomorrow, value being lower today is, if this doesn't surprise you, is a sign that we are not trending higher. And closing inside the spike down here is bearish moving forward. But we are at the lower end of balance. So if in the overnight they just dip a little lower and come back up, or if we open, inside the range tomorrow, inside this balance area, we could just keep bouncing around in here. However, if we wake up tomorrow with a gap down on top of the spike down that we're closing in here, that would be very bearish. So where we open tomorrow in relation to today's low will be important. And I encourage everyone to come right back here to this channel at 9 a.m. or 9:30 a.m. tomorrow morning, and we'll talk about it together then. The market is closed. Spike rules will be in play tomorrow. Have a great rest of your day, everybody. Thank you so very much. And thank you for the 123 likes. I sure appreciate that. Bye.